Hello and welcome to Vikas Mudra channel. I am Hari Kumar with Insights. The global economy, which has been devastated by the COVID 19 pandemic, received a further major blow on March 7, Monday, that is today, when oil prices reached a 14-year high, with Brent, the benchmark crude variety price, crossing $130 a barrel. The WTI, which is another benchmark crude applicable to the United States oil, also neared $130 a barrel with prices reaching around $128 per barrel. A barrel of oil is around 160 liters of oil. The other major benchmarks like OPEC crude basket, which consists of oil varieties from OPEC countries, and the India crude basket, which consists of the crude varieties imported by India, reached $117 a barrel. So, oil prices across different varieties suddenly increased, and the increase was around 10% considered to the previous day's prices. The major provocation for today's price rise was a statement by US Secretary of State Antony Blinken made on Sunday that US is considering an embargo on Russia's energy exports along with its allies. A mere statement impacted the market hugely, even though the European Commission president didn't say whether the European Commission was considering or supporting an embargo on Russian energy exports, because Europe is going to hit in a major way if such an embargo happens. Now let us look into the history of oil price rises, its impact on major regions in the world, as well as the future of the current oil price rise. If you look at the history of oil price rises, a big number of oil price rises happened because of geopolitical reasons and not because of the mismatch of supply and demand. The first time the volatility hit oil market was in 1973 when OPEC implemented an embargo following its decision to teach a lesson to those nations which supported Israel in the 1973 Arab-Israeli conflict. Later on, in 1978, during the Islamic Revolution of Iran, volatility again hit the oil market. In 1981, when when Iran and Iraq started war, definitely there was huge volatility in the oil market. The oil prices increased. Again, during the 1991 invasion of Kuwait by Iraq, oil market became volatile. This happened again by the end of 1997, when during the Southeast Asia financial crisis. In 2008, when the global financial recession began, again oil prices felt its impact. But in 2014, the oil price, the fluctuations and the volatility in the oil market was because of another reason, because of the mismatch between the demand and the supply. And this was the volatility which lasted long, which lasted more than 6 years. And it was the oil prices began a free fall and it continued till last year, 2021. Now, by November 2021, oil prices started climbing steadily. This was because during the downturn period of oil prices, that is from 2014 to 2020, during that period, many countries decreased the oil production, and it's not very easy to increase oil production all of a sudden. So if the wells have to be prepared to pumping again, it needs huge capital expenditure. It takes many months to return to the previous production levels. So all these impacted the production side. Now the International Energy Agency has calculated that the current demand, which has improved after the world succeeded in controlling the COVID pandemic, has not matched or is not matching the rise in demand. The production is not matching rise in the increased demand. So this is one of the major reasons. This was one of the major reasons for the slow rise in oil prices. But the sudden rise in prices is because of the Ukraine-Russia war. So now let us check the impact of Russia's a possible embargo on Russian production and its impact on the oil market. At present, Russia with US as well as Saudi Arabia is one of the major producers of oil in the world. And in fact, Russia is the second biggest exporter of oil after the Saudi Arabia. The US oil production, the major part of US oil production is consumed domestically. So this is the scenario. It is estimated that Russia exports almost 5 million barrels of oil a day to the world market. So if there is an embargo on Russia's energy exports, it means all on a sudden 5 million barrels of oil will be taken away from the global market. And even if the US or Saudi Arabia increases the production, it cannot match 5 million barrels a day suddenly. The US, the major producers of oil, is now shale oil companies. The big shale oil companies or the public sector shale oil companies are not willing to immediately invest in production or expand their capabilities because at present they want to share the profit with their investors. Now there is the small scale producers or private producers. Now they may increase the production, but the maximum they can do is around 1 million barrels a day. And if Saudi Arabia increases its production, the maximum it could do is around 1.5 million barrels. So if both these major producers will be able to bring to the market only 2.5 million barrels of oil, and it is no match to the over 5 million barrels being exported by Russia at present. And moreover, there is an effort to allow Iran to export oil and reach an agreement with Iran on nuclear issues. However, Iran could not produce vast amounts of oils all on a sudden, and it will take time. And also remember that the US has not reached any agreement with Iran regarding the nuclear facilities. So it means all on a sudden the availabilities of oil in oil market is not going to increase. So it is there, it will be there, the price rise will be there if there is an embargo on Russian oil. Now, who are the major consumers of Russian oil? Europe is the major consumer of Russian oil. Along with Europe, China is also one of the major consumers of Russian oil. It is said that around 50% of Germany's energy needs is met by Russian oil. And similarly, around 20 to 30% of Italy's as well as France's energy needs or oil needs are met by Russian oil. So if an embargo is implemented, it will definitely going to affect European countries bitterly. And some of the experts have pointed out that in case of an embargo, Europe will face a recession, the US will face a slowdown, India will be also hit, China will be also hit. So Russia will definitely face will be totally devastated. So this is going to affect the global economy in a major way. Now let us check what is going to be the future. The future in case of an embargo or if the war worsens, then it is going to be very tough. The oil prices definitely cross $150 a barrel, and it could even reach $200 a barrel. This is what experts in the oil sector say. So in that case, it's not easy for the for any other producers. As I said earlier, the U.S. shale producers or the Saudi Arabia won't be able to bridge the gap or very quickly. So oil prices, definitely, if there is an embargo, oil prices will further shoot up, and the world will face a major crisis in the coming days. But at the same time, the alternative energy, there will be more investment into alternative energy like solar or other areas, hydrogen production. All this can happen, but it is mid to long term. The near term, the world economy will be hit further. And however, though the U.S. State Secretary Blinken has spoken about an embargo, there is no support to his suggestion, and even the European Union is hesitating, because everybody knows that if there is an embargo, the world will be devastated. So that is the situation. This is for now. Meet you next time with another topic. Till then, goodbye. Namaskaram.